teaching. In today's teaching, I'm going to be applying every single thing I talked about in yesterday's class in another chart. Okay, yesterday we did the pure price action trading analysis on US 30. Today it's going to be on GBP JPY. Okay, so just like we did on US 30, we are going to apply what is known as a multi-time frame top-down analysis. Okay, what does this mean? This means that we go on to the highest time frame available to us on the market, which is the monthly time frame, and we'll take it from the monthly to the weekly, daily, 4 hours, 1 hour, 30 minutes, and as low as the 15 minutes time frame for a trade entry opportunity. Okay, so the exact same way we applied it on US 30 is the exact same way we are going to apply it on JPY. So you guys can, pay rapt attention to it. Remember, the first thing we do is what? Identify the zone where price is at on the monthly time frame. Without a doubt, this is the zone where price is at on the monthly time frame. The next thing we'll do is to what? Read the structures that took prices to this place. Okay, what are the structures? If we backdate from as much as 1975, GBP JPY has been bearish. The pound has been falling to the Japanese yen since about 1975. It has been falling forever, right? So our job is what? Okay, how can we tap into a real-time trade entry opportunity? Clearly saying that GBP JPY overall is bearish. What does this mean? This means if you are buying, it's a retracement. If you are selling, it's in the direction of trend, right? Okay, so let's go ahead and now read the structures. We can't be able to take the structures from here because of the screen size, right? But let's just start from where we can, which is right here. Okay, so this is push, exhaustion of clear coordinations of lower highs and lower lows, right? Lower lows, lower highs. Price made a lower low right here. Attempted to make the first lower high right here, but that was not enough to create a lower low. The bears were not enough. So what did price do? Prices grabbed an higher low right here and went back again to test the lower low level for the second time, which triggered a break of the low point, and price created a lower low here. Then prices created this high here, which was supposed to be a lower high, but it was not enough. The bears were not enough to send price to create a lower low. What did it do? It grabbed this higher low right here, then came back to test 61.8 for the second time. Okay, so now the big question is this: is history about to repeat itself again? At the end of the day, we know that we are able to use historical data to predict the future movement of prices because history repeats itself on the charts, right? So now what are we going to do? We'll bring the Fibonacci from the high here to the low here, and we can see that prices came to the 61.8 the first time. Remember, 61.8 is a zone and not a pinpoint area. So even though price traded above 61.8, it still respected it back because this bullish move is a retracement, okay? And if a retracement trades above 61.8, it is still going to respect it back. So price came to 61.8, traded a little bit above, it respected it back, but the bears were not enough. Okay, so price is now pushed back again to grab more bears at 61.8 again, and the bears were now enough to send prices back, and we can see prices create a clear lower low right here. Okay, so when that particular movement was entirely done, what happened? We saw a new movement right here, which is where prices is currently at. Where prices came around the 61.8 for the first time. This time around, it didn't even touch 61.8 pinpoint, just came around the zone. Okay, for the first time. Then what the prices do? That was not enough to create a lower low. Prices grabbed an higher low right here. Then what? Tested the 61.8 for the second time right now, and I am pretty sure that remember that all these bullish moves are only but a retracement, because if we are selling in the direction of trend. So first touch of 61.8 here. Remember, first touch here couldn't send it down enough, even though it sent it down, but it was not enough. Second touch sent it down enough. First touch here couldn't send it down enough. It went down, but it was not enough. Second touch here to complete that exhaustion, we know price is going to crash to the ground level. Okay, so this second touch of 61.8, always be aware of second touches of 61.8. Second touches of 61.8 usually come with a very sporadic movement. Okay, second touches of 61.8 always send prices on crazy runs, either on the bullish or on the bearish side. So it's something to take note of. Okay, so this is the second touch of 61.8, and we are pretty confident that the bears are ready to take over prices and send prices down for a lower low. So what is the next thing we are going to do? The next thing we are going to do, just like we did on US 30, is to what? identify the highest point of the chart, which is right here, then identify the last higher low, which is right here. Remember that all of these bullish moves are only but a retracement that sends prices towards to the 61.8. So let's identify this level right here as a monthly 61.8. This is a monthly 61.8 level. Okay, so what are we going to do? We are now going to take this window here as our range of focus. So the last higher low plus the rejection from the monthly 61.8, second touch of the 61.8, that ends that retracement. And what we are looking for, an opportunity within this range of focus, right? Within this range of focus, if we see a sell, it's in the direction of trend, because all of these bullish moves are only a retracement that ended right here, while if we are buying, it's a retracement. So now we'll take that range of focus to the weekly time frame. Okay, so now within this weekly time frame, what are we seeing right here in the weekly time frame? Okay, here we can see the bullish structures. We can see prices make push, exhaustion, push, exhaustion, all of these bullish structures, right? Push, exhaustion, push to hit the monthly 61.8. Then there was a break of structure. Now that there was a break of structure, what did we expect? We know that after a break of structure, prices most times does not head to the take profit pinpoints. What does prices do? Prices gives a discount after a break of structure. Instead of heading to take profit pinpoint, what does prices do? It gives a discount to the 61.8. And here we can see that prices tested 61.8 twice before the break of structure. Let's bring this Fibonacci out to see the 61.8. We'll bring out the Fibonacci from the high here. Okay, let's take this one out and bring a fresh Fibonacci from the high to the low right here. So we can see that there were two touches of 61.8. We all know that after a break of structure, which is what we explained, after a break of structure, about 90% of times, instead of price heading straight to take profit, it will go ahead and will give a discount. Okay, in this case, it went ahead exactly and gave the discount. Okay, tested 61.8 for the first time, grabbed an higher low, tested 61.8 for the second time, and we can see a crazy bearish movement that broke the last higher low of this, and this movement is going to send prices to as much as this level. Okay, so this is what I'm anticipating with prices. Okay, so we can see that the first moment that took price for the discount was push, exhaustion, push right here, break of structure. Okay, ending that bullish movement. The bullish movement is more than likely ended, and the bears are going to send prices down to as much as this level. Okay, so our job will just be okay, how can we tap into our own trade entry opportunity? Okay, so what we are going to do is let's take all of these movements to the daily time frame just to expatiate and read the structures again. But this level, we identify this level as a 61.8 potential reversal area. That is 61 PRA will more than likely send prices down to as much as this level. So let's take it to the daily. Okay, so what is going on within the confines of this daily time frame? Sorry, I'm on holidays. I traveled briefly for holiday today, so that's why my network is a bit glitching. Okay, so what is going on the daily time frame? On the daily time frame, we can see prices make all of these structures, right? Push, exhaustion, push, exhaustion, push, exhaustion, push, exhaustion, push, exhaustion, push, exhaustion, push to hit the 61.8, and there was a break of the last higher low right here. A break of structure occurred. After the break of structure occurred, what did we see? We saw prices make all of these movements that sent price to the 61.8, hit 61.8 for the first time, grab this low right here, tested 61.8 for the second time, and we can see that the last higher low, the last low here was broken, and these movements are just retracement movements that are going to send prices down to this level. Okay, so now what are we going to do? Our job is now we know that price is a bearish to as much as this level, but now our job is now how can we tap into a real-time trade entry opportunity? Okay, so it's going to be simple. We are going to take this movement. We can start from here, from the second move that took prices to 61.8 to this level to read the bearish structures. What are the bearish structures? We can see prices make push, exhaustion, push, exhaustion, then price made push, and price is currently at this level. It's possible price is grabbing under lower high, to come to this level right here, TP1, then where is going to be TP2? Let's identify another area, sensitive area. We can see this support level here. This support level here comes before this particular support level here. So this level here is going to be TP1, okay, and this level here is going to be TP2. Okay, here will be TP3. It's not compulsory, it is one trade position, right? After here, you can decide to take profit and wait for a new entry to sell here and wait for a new entry to sell here. So it's not compulsory you swing it down here, but it is take profit 1 to this support level, take profit 2, support level here 1, 2, 3. Okay, so now that that has been defined, what are we going to do? We are now going to what? Read all of these bearish structures which we've done. So now what are we going to do? We are now going to identify, where price currently is now. Is there a potential reversal area there? We can bring out the Fibonacci from the high right here to the low right here. We can see that this zone is a 61.8 zone. So let's identify this zone as a 61.8 zone. Okay, so it could just be a situation of what? Of push, exhaustion, push, exhaustion, push, 61.8 to complete this exhaustion. Okay, to complete this, the retracement of this push for sell year 1, sell year 2, sell year 3. Okay, so what are we going to do? We've identified the PRA. We'll now go to the 4 hours time frame to read the structures. What is going on the 4 hour time frame? On the 4 hour time frame, apart from this zone being a 61.8 zone, we can also see resistance here. Price rejected this resistance. Okay, so this resistance zone was rejected by prices. So we can now say this zone is what? Is a resistance slash 61.8 potential reversal area. That is what is this zone. Okay, so now how can we tap into our entry? I'm going to read this bullish structure that took price to this PRA. If I see a break of this bullish structure, I'm going to sell to here. This level here will be take profit 1. Okay, and this level here we take profit 2. This level take profit 3. Okay, so what will I do? Take this move to like the 1 hour time frame. So on the 1 hour time frame, what are the structures here that took prices to that resistance PRA? The structures are clear bullish structures of what? Of push, exhaustion right here, push, exhaustion right here, push, exhaustion right here, and push. Okay, to hit this resistance and 61.8 PRA, and we can see what? A break of structure. With this break of structure, there's a high probability that this whole bullish structure has been violated, and that would mean that what? We are going to sell here 1 and sell to the consecutive levels 2 and 3. In fact, after the break of structure, beyond this entry, what the prices do, it gave a discount. Came to 61.8 the first time, came to 61.8 the second time, and we will be expecting price to sell to as much as this level. Okay, so what are we going to do in this case? In this case, we are now going to bring out the Fibonacci from the high right here to the low right here. We can see that what? 61.8 tested first time, 61.8 tested second time. Remember what I told you guys about the second touch of 61.8, and this is happening when what? We could see what? A break of structure. There's also a probability that what? The fractals are different, but we are going to take the risk that what? That this break of structure right here is enough to send prices to as much as this level, and all of these are just a discount, that would continue in the direction of trend. So now, if you are entering via entry variation 1, right? Let's see, via entry variation 1, so the break of structure, it would have been a situation of short stop loss somewhere around here. Take profit 1, if you want exit take profit 1 is what? 1:4 risk to reward. Okay, take profit 2, it's about what? 1:7 risk to reward. I definitely will not be selling to take profit 3. In fact, the safest exit, just walk away. Take profit 1. You are risking $100, you are going on with $400, life is good. Okay, if you're entering on entry variation 2, which is 61.8 pinpoints, you'll be getting what? And 1:6.8. Okay, obviously price has moved past entry variation 2 now. But for, if you did the analysis and you got entry variation 2, you'll be getting 1:6. While, at this level here, pinpoint on market opening, if you're entering pinpoint on market opening, you'll be getting 1:3 on this particular trade position. So this is the entry that we are going to be looking forward to for the week. Okay, so what I'm going to do is while we're doing the analysis, a lot of people joined. So we are going to go back again and revisit it again from the monthly time frame. just to allow even every single person that was here just, you know, enjoy the flow of it again. Okay, like we said, we operate using what? A multi-time frame top-down analysis. Okay, so what do? You go onto the monthly time frame, and what do? You read all of the structures on the monthly time frame. Forever, JPY has been bearish. Okay, before we're born, this is what? 1975. Okay, it has been bearish. It has been bearish forever on clear bearish structure. So it's not, you know, so this means that what? If you are selling, remember that what the monthly time frame tells us the overall direction of trend, right? So we just go on to the small time frames to pick a trade entry opportunity, knowing fully well that what if we are if we are trading in the overall direction of trend, that means we are trading in the direction of trend. While if we are trading, you know, against the overall direction of trend, that means it's a retracement, right? Okay, so now we have been able to clearly see that what overall price is bearish, right? So our job is just what? Tap into a trade entry opportunity. Simple. So what are we going to do? We are going to read all the bearish structures that brought prices to what? To the real-time point where price is at, which is right here. So what are the bearish structures? You know, if we want to even take it from the highest point here to be a situation of this is push, exhaustion, right? Push, exhaustion, small fractal right here. Then prices continued. You know, let's zoom from here. Prices continued. Declare bearish coordinations by making what? Continuous bearish structures of push, exhaustion, right? Push. This was supposed to be the lower high, but the bears were not enough to create a lower low. Instead, prices grabbed an higher low, tested 61 points for the second time again, grabbed a lower low, tested 61.8 for the first time. This was supposed to be a lower high, but it was not enough to create a lower low. Prices grabbed an higher low and tested 61 points for the second time. So we said that what? Okay, there was a move that happened right here, that what prices came to the 61.8 the first time here. It was not enough to send it back down enough. It came down, but it was not enough to create a lower low. Instead, price came around the 61.8 again to test it the second time right here. And when prices did that, what did we see? We saw a very sporadic sell. So now, in similar fashion, is history about to repeat itself? Okay, where prices in this case also came around the 61.8 zone. Remember, 61.8 is a zone, like we always say, and not a pinpoint level, right? So even if so far the movement is a retracement. If market trades above 61.8, so far it's a retracement, it's going to correct back into the 61.8. So here we can see prices came around the 61.8 the first time. It didn't touch it, but that was not enough to create a lower low. Instead, it grabbed an higher low. Then what did it do? It came around 61.8 the second time, and this second touch of 61.8 would have as well be enough to send prices down. Remember, this is the second touch of 61.8. All of this bullish move are retracement. So I personally want to believe that the bullish movement has ended. That retracement to 61.8 has ended, and the bears are here to take over. Second touch of 61.8. Remember, we should be expecting something very, you know, sporadic, a very crazy bearish run. So what are we going to do? Just like we always do, we'll take what the highest level of the chart, right? And we'll now take, in this case now, the last higher low right here, in order for us to what? In order for us to zoom into what will now be known as a range of focus. Okay, at the end of the day, we can't focus on everything. We have to look for, you know, we have to keep slimming prices down into small pieces for us to see a real-time trade entry opportunity, right? We've understood the story from the monthly time frame, but our job is now what? Break price into pieces. Okay, small pieces until we see an entry, right? So now this window now is now our range of focus. Clearly, the monthly time frame is bearish. So we know that what? If we are selling, it's in the direction of trend. If we are buying, it is a retracement, right? So now we'll take that window to the weekly time frame. So within the weekly time frame, what are we saying right here? Within this weekly time frame, first of all, we'll identify the fact that price is rejecting a monthly 61.8, not forgetting that this is even the second touch of the monthly 61.8. The first touch sent price on a strong sporadic bearish movement, talk less of the second touch of 61.8. This one will go ahead and create that lower low. Okay, so what are the structures? We saw prices make push, exhaustion, all these structures which will still go on to the daily time frame to expand. Hit 61.8, the second monthly touch of 61.8. What did it do? Broke bullish structure. After breaking bullish structure, what did prices do? Prices, instead of heading straight, to take profits at this support level, right? Because what about 90% of the time, after a break of structure, prices gives us a discount. Okay, what's a discount? It goes back to test 61.8, and in this case it did the same thing also. Tested 61.8 of this bearish movement, created an higher low right here, came to 61.8 again. Remember, second touch of 61 and we can see a break of this last higher low, preparing for a very strong sell. So now this is what the 61.8 level right here identified. This is what the monthly, this is what the 61.8 PRA, known as a potential reversal area. Okay, so now we have seen what this movement, right? A break of this bullish structure. Prices hits the first PRA, hits the second PRA, and price is going to run to as much as this support level. Okay, so now that that has been figured out, what are we going to do? We are going to go on to the daily time frame again to expand the structures. Let's expand these structures on the daily time frame. Okay, so let's go ahead to the daily time frame to expand the structures. Okay, so what is going on the daily time frame? Expanding the structures. The structures are clear bullish structures of push, exhaustion, push, exhaustion, push, exhaustion, push, exhaustion, push, exhaustion, push, exhaustion, push to hit that monthly 61.8, second touch of the monthly 61.8, broke structure. So all of these moves are only a discount. Instead of price heading straight to take profit, it's created all of these discounts. Went to 61.8, tested 61.8 for the first time, created this low point, tested 61.8 for the second time, and broke this low point. So all of these are just quick retracement levels that is going to send prices to this support level and for, you know, continuous sell movements, right? Okay, so now what are we going to do? How can we tap into a real-time trade and trade opportunity, right? Okay, let's read the old discounts. The old discounts are what? Push, exhaustion, hit 61.8 the first time, created this low point, hit 61.8 the second time, and broke this low point right here. So all this just looks like a retracement for a further push to this low level. So how can I tap into my entry? How can I tap into my entry is to what? Is to read these bearish structures. Read these bearish structures and see what? See how I can tap into my entry at what? At the break, you know, at the end of an exhaustion. Remember that what? For example, this is a bullish structure, right? We don't buy on the push, we buy at the end of the exhaustion, right? We don't buy on the push, we buy at the end of the exhaustion. We don't buy on this push, we buy at the end of the exhaustion to ride the push. Okay, the same thing for a bearish movement also. Okay, we don't buy on the push, we buy at the end of the exhaustion to ride the push. We sell. We sell at the end of the exhaustion to ride the push. We sell at the end of the exhaustion to ride the push. We sell at the end of the exhaustion to ride the push. So that is our job. Okay, we don't buy we buy at the end of an exhaustion. That is the idea. So now our job is what? Okay, we already know that what? We are looking for a sell entry, right? We've read it that, okay, you know, price has cleared all the movement and we know price is coming down. So how can we tap into an entry? Our job is to what? Look for the end of an exhaustion. So now let's read the structures from the second touch of 61.8 now. Okay, if you want, you can take it from the first touch of 61.8, but let's just take it from the second touch of 61.8. So this is what? Push, exhaustion, lower high, then prices made this push, then prices came around here, you know, and this level looks like what? It could be the end of what? Of the exhaustion. Remember that what? We sell in this case at the end of an exhaustion. Okay, so we'll look for the end of this exhaustion, identify the PRA, look for a break of structure and sell this level now, this support level now. Without we take profit one within the support level. Okay, eventually we know price is coming here. However, we are smart enough to know that what? There's a support level right here. So you want to identify this level as what? As a take profit 2. In fact, I might not go beyond this take profit 2. In fact, I might not go beyond the take profit 1. So this take profit 1, but yes, 100% prices will crash to take profit 2 because prices only went for a lower high to create this movement. Okay, so now how can I you know, identify this level here as a significant level of PRA? I brought up my Fibonacci from the high here to the low. Okay, so identify this level as what? As a 61.8 level. 61.8 level, all this level as a 61.8 zone that price is rejecting, as we can all see. So now I went to the 4-hour time frame again Let's see, is that level, is there any other thing that makes that level a PRA? We now discover that what, apart from all this zone being a 61.8 zone, there's also what, a resistance around this zone. So all these zones are now what, are now resistance slash 61.8 potential reversal area. So we know that this potential reversal area, if prices breaks the bullish structure at this PRA, is going to come here 1 and what, crash here 2, crash here 3. Okay, so our job will be what, look for what, a break of the bullish structure. Okay, so what did we do? We now decided to what, take this bullish movement to what, to the 1 hour time frame to look for a break of structure, which we saw on the 1 hour time frame. We also saw it on the 30 minutes time frame, on the 15 minutes time frame. The break of structures are also clear on those time frames. Okay, so what are we going to do? Read the structure that took price to 61.8, identifying this level here as a support level of take profit 1. So what are the structures that took price to the resistance slash 61 point PRA, potential reversal area? Is what, push, exhaustion, right? Push, exhaustion, right? Push. Then price made this exhaustion, push to hit this resistance PRA, and prices broke structure. In the direction of trend, this is take profit. Okay, take profit 1, this is take profit 2. And there's even a take profit 3 to the strong level here, but we're not going to write to take profit 3 at maximum, write to take profit 2 at maximum, right? So now there's been a break of structure. So now that there's been a break of structure, prices in all of its glory, in all of its blessings, it decided to give us what, a discount to entry variation 2. Okay, so tested 61.8 the first time, as we can see right here, then tested 61.8 the second time, as we can see right here. Remember what we talked about, double touches of the 61.8, expect a crazy bearish movement. Okay, so now we've seen what, a break of the bullish structure. Like I said, there's also a probability that this low here is a different fractal and here is a unique fractal in itself, but we are going to take this risk, you know, putting the fractals together, that what, this break of structure here led to the discount right here, double touch of the discount. We are going to see a crazy sell, you know, that will send prices here, you know, and send prices to this particular support level. Okay, so what will be our entry? If you are entering, for example, right now on market opening, even though I had sent this signal right here, as soon as prices broke somewhere around here, I had sent the signal with our stop loss somewhere around here. Our stop loss is here. Then what, take profit 1, which I sent to the channel, is about what, 1:3.9 risk reward. Take profit 2 is what, is 1:7 risk reward. That means if you are risking $100, you go with $700. If you are risking $10, you go with $70 on this trade position, right? Okay, so that aside, beyond that, if you are entering, you know, on the discounts, if you entered on the discount, it's your stop loss right here, discount at 61.8, pinpoint sell. If you are taking profit here, TP1 1:6, and TP2 is what, 1:11, you know, something around this, you know, let's yeah, this is 1:11 to TP2, while TP1 is what, is 1:6. If you're in 1:6 and you want to hold to 1:11, be rest assured that you should take half profits, you know, and break even prices. You know, even if, you know, you enter this in entry variation 1, so far you want to write to entry variation, right, to take profit 2, make sure you take half profit and break even. Okay, so but now if you want to enter pinpoint on market opening, you missed this opportunity. You want to enter market opening, you know, take profit 1 is what, 1:3, take profit 2 at this support level is about 1:5.5. Okay, so this is our current trade opportunity on GBP JPY. PRA identified. You can see all the resistance levels. Apart from resistance, this is a 61.8 zone also. That prices only came for a discount. Remember that what, all these bullish moves are only a retracement, right? So we've seen a break of structure. We've seen a double retest of the 61, double test of 61.8, you know, to solidify that discount. The sales are here, and the sales are going to push prices heavy, you know, on the daily. What did we see on the daily? On the daily, we saw clearly that all these moves are clear bearish movements of lower highs and lower lows. Lower highs, lower highs, lower lows. Price created this low. All these are clear. Price is free to fall to this level. But remember that we only sell at the end of an exhaustion. So right now, the end of an exhaustion has been found, which is a PRA level right here. A break of structure has been seen. Our job is to sell to the freest level here. This level here, obviously, the price rejected from for take profit one, but to the freest level here. This is the support right here for a 1 ratio. If you are entering a market opening, you get 1:5 risk to reward on this trade position. So this is what we'll be looking at on this trade, and this is what we'll be looking at on this trade position, and this is how we'll be riding it. So this is how we're able to apply. On Tuesday, we'll check updates on this trade on Tuesday. Obviously, on every single trade, risk management must be applied. Okay, if wins were 100% for traders, there will never be a conversation of risk management. Risk management is what is enforced because what? Because we are, the market is not perfect, and we are not perfect traders ourselves, right? Okay, we are just using what? Data to predict the future movements of prices, right? And sometimes we might get it wrong, okay? Or sometimes even the market itself might violate its own information, right? So, but adequate risk management must be used. But in this trade, I'm quite confident that we'll see a rejection of send price to take profit 1 and take profit 2, where we'll get like a 1:5 risk to reward on take profit